All right, we are live. Silver Doctors live on air. It is Monday, the 16th day of the month of December. Coming down a home stretch in 2019. And we have a great segment this afternoon. Looking forward to finding out how the weekend went for everybody, as well as share our thoughts and analysis on what's occurring and what's coming. So, my name is Mike. Got my better half. It's a half dollar. How you doing, my friend?
Doing good today, Mike. It's good to see you. Happy Monday. I got a little snow in my neck of the woods. I don't know if you got any snow on the ground when you woke up today.
We got a couple drops, but nothing major, thank God.
Yeah, the kids have exams this week, so I'm sure the school's sweating bullets. They're like, no, we can't have snow this week.
Definitely. So, that being the case, let's check in real quick via chat, make sure everything is flowing smoothly, and then we can get right into the topic of today, or topics rather. So, let me check in with the chat and let me see what's going on. We have Glenn. It says, "Hey, Mike and Paul, where do you think silver prices are heading in the upcoming days and weeks?" We got Chris. We got Big Bubs. We got Pabar. Okay, so a couple people tuning in from Seattle. And it says, great title, because it's true, very true. So, that being the case, Mr. Half Dollar, where do you want to take us this afternoon?
I want to take us on a trip to the mall that I had, and I want people to participate in the chat and even call in with what they're seeing too, because my family and I took a trip to the mall yesterday, Mike, and this is like a regional mall. This is like something that people do, like it's a destination mall. It's not just like your standard mall in your regular old city that's all run down, right? Retail apocalypse. This is like a destination mall. Yeah. And unfortunately, old Half Dollar gets dragged out about 2 times a year to go to this mall. And so this is the second time. The kids, they're at the age now where they pretty much say what they want for Christmas. And so there's like no surprises at all anymore. And, this is where they want to go to get new clothes that they just have to have. So there are 5 things that I saw at this mall yesterday that I want to talk about that, to me, show me anecdotally that the business cycle has topped here, that we're headed for recession. And that's why I want other people to participate, maybe call in, maybe put in chat what they're seeing too, because these are all different things just from spending one day in the mall. Because, I don't look at the clothes. I'm not buying anything. Well, I look at a little bit of the clothes, but I'm mostly like watching the people and just interacting and seeing stuff there. Yeah. So you want me to go ahead and start it off with that, Mike?
Yeah, please do. Let's touch on it. I'm curious as to what you end up getting and what you did get because of the price.
Okay, first thing, Nike shoes. Mike, my point with this, the sign that I'm seeing is that people are having a hard time buying stuff, and I think that they would be buying stuff if they could be buying stuff. Yeah. Here's the issue, and here's what I saw. Like with kids, teenagers nowadays, right? The first generation growing up with a smartphone in their pocket their whole lives, basically. They do all these selfies and these poses with them and all their gear and all these places they go, right? And tennis shoes now are expensive. I don't really like, spending, I put a hard limit of $200. Don't show me those $350 shoes. $200 is your hard limit for a pair of tennis shoes, or hopefully that would be like Timberland boots or something, right?
Pretty generous still, though, $200.
Yeah. But here's the thing, right? Yeah. So we're buying these Nike shoes for my daughter, and they're these white shoes, right? And, they got like stains on them, like they've been worn. And, I tell my daughter this, right? You got to like inspect these shoes. You got to take them out of the box and look at them, because they're trying to do some shady stuff where they sell you some dirty shoes, right? So sure enough, these shoes were dirty, right? So we had them go out and get some other ones. So what is that telling me? That is telling me that people are buying these shoes, right? They're going to a dance at school, or they're going to a party, or they're doing something. They're taking their selfies, and then they're returning them to the store. Now get this, Mike, get this. You would say, okay, that's just one example of this going on. Mike, the very last time I bought shoes over Thanksgiving weekend for my son was in the Vans store, and the same exact thing happened. And Vans aren't even that expensive. Vans are like $80 to like $125, right? So my point is, people could buy these things if they could afford these things, but they can't afford these things, right? So they're just buying them, using them, and then they're taking them back. And then people that don't know to check the shoes because they're thinking they're new shoes. No. Now you got to get like Third World does now, and you got to start inspecting stuff, right? Pretty soon, we're going to start seeing a little screw-in thing where you test the light bulb out inside of Walmart. You know what I mean? But so that's just one of the things I saw when it came to shoes. And it brings up another interesting question. Why isn't there any stock, right? And why are they trying to push stuff that obviously is not going to fit, right? So it's like in one of the stores, we found them in the second store, but in the first store, my daughter's looking for these Nike shoes, right? and they don't have them in stock, right? But we don't have a 7.5 in women's. Oh, but we have this men's size 4. Maybe this would work because they're kind of like unisex. It's like, no, we don't want that. We want the proper size and the proper and this proper sex, right? Yeah. So that's one. So why don't they have just the common sizes of shoes? They got all the weird oddball sizes. That's one. And then two, a lot of the stores are doing this thing where you can order in the store and then they'll ship it to your house for free. But this just shows how this whole online tax dynamic is really starting to complicate things. Because, for example, this mall charges 6% sales tax, right? That's the sales tax where it is. But to ship it to you, and I was going off of El Paso because here where I am now, it's not as high a tax rate. But in El Paso, the tax rate is 8.25%. So if I would have bought these in the store, paid in the store, right, and had it shipped to my house, if I was still living in Texas, I would have had to pay 8.25% sales tax instead of the 6% sales tax at the mall. So there's just weird dynamics going on. And, it's like we talk about, the government is only complicating things. They're not making anything easier when they do all of these changes. So that's just the one little example. And I got 4 more examples of stuff I saw, but I'll just stop there and let you put in your 2 cents on that, Mike.
All right. So yeah, so as far as just the pricing of things, definitely it's a problem as far as people returning things. And so one of the things I think for most stores, the policy is that you can't return shoes that's already been worn. So
hold on. I'm saying volume.
Okay.
Volume.
Your volume.
Can they hear you? No, your volume.
Can you not hear me?
It says, Mike, turn up your volume.
Oh, I'm sorry. Okay. So yeah, I'm sorry, I got my so it's probably echo.
Technical difficulties.
Yeah, once again, when you're ripping and running.
Yes, Seth, $200 shoes is proof of out of control inflation. Mike, my daughter's got shoes for $500 on her Christmas wish list. I'm like, you need to scratch those off right now immediately. But go ahead with your thought about the return you were saying, Mike.
All right, so volume-wise, is everything good? Because I see
they're saying I'm quite loud. Let me move my microphone back a little bit.
All right, so my volume should be good. So I'll move my mic up a little bit. You can return dirty diapers at Walmart. That's interesting. So no, it's somewhere low blood pressure. You can return dirty diapers. But no, as far as the return policy, I know a lot of stores that my children shop at, they would come home, try the shoes on, they don't like it, they don't fit, they don't really wear them anywhere, but then they want to take them back, and if there's any scuff to the particular shoe, they say, sorry, we can't take it. So
that's weird.
I stopped shopping at the mall a long time ago, so everything I do now is pretty much online. Like, I bought myself some shoes this weekend, and I went to Burlington. And so it's a pair of Adidas shoes that he wanted a year ago. It so happened that it wasn't really worth buying at that time. Paid $45 for them. So it's like one of the things where, son, just give it time, and you'll get whatever shoe you want at half price, because now they're at the point where they come out with a new style, a new season. Not even a year now. It's like half a year they come out with a new edition. So be patient.
They're saying louder. They're saying louder still.
Louder, please. Okay, so apart from me, well, let me see. I'm gonna just switch and use a different microphone because I'm not sure. Let me switch this up. So I would do. Let me see. Okay. So I should be good. Okay, so my microphone. I wasn't using the right microphone, so I should be good now.
Yeah.
Okay, so let's keep it moving right along. And so before we move further, I see a couple things in the chat that I want to touch on. And so let's get to some of these questions here before we get too far ahead of ourselves. And so let's get to the very first one where Glenn says, where do you think silver prices are heading in the upcoming days and weeks? So let's talk about before the end of 2019 and the beginning of 2020. What are your assessment, Paul?
Well, in weeks, I think that we're going much, much higher, and that's obvious. But this week is going to be a hard week for 2 reasons. Friday coming up is a quad witching, right? So you got options expirations on the month, on the quarter, on the year. You got all this crazy stuff going on with options expiration, right? And see, we don't know where the cartel needs the prices to be to best play into the bullion banks of whoever needs the biggest assist on price this month, right? So I think that it might be under $17. I'm not sure. And the other thing that's giving me a little bit of uneasiness here is the fact that, we haven't gotten extremely, extremely oversold or oversold in gold and silver just yet, right? So I really would have liked those technicals to get extremely oversold. And I'm not liking silver's trading volume lately. So it's also showing me that they can come in here and strong arm price if they really want to. So, it might be hard to get over this week. I really wish, we would have gotten to extremely oversold conditions first before starting to rally. But sure enough, we're sitting here on Monday above $17. Gold was above $14.80, but it's not now, but it's pretty much close to it. So we're looking good here to start. And the technicals are certainly supportive for a rally. I just wish we would have been starting from a lower, more oversold place. That's kind of what I see here going on. And then, the winter rally's coming, right? It's just a matter of that timing, right? But, that timing, that's what will blow up a trading account. So,
yeah. Now, quick question. As you're explaining that, would you prefer to have $17 silver now or $20 silver at the end of the year? What would you prefer to have? $17 or $20 silver head into the new year?
Probably $20 silver heading into the new year. Because it would get more excitement back into the space. I think that we haven't gotten over $20 in several years now. I think 2016 was the last time, because I don't think we ever got over $20 back in 2017 or in 2018. I think that, for the interest to come, I think that $20 would be good. Plus the dollar looks like it's turning down here, right? So, the dollar is about to have a death cross on its daily chart, which is where the 50-day moving average falls below the 200-day moving average. That's very bearish. These dollar bulls, they got to be sweating bullets right now. But that's another thing, right? Because if the dollar's going down, we might have that $20 silver here. I don't think it's going to be at the end of the month per se, but I would like to see $20 silver sooner than I would like to meander here at 17, just for the interest point of view.
Okay. Now, as you're talking, it looks like there's a little lag or something on my screen, so it might be evident for the viewers, but we're going to keep working and things get better. So we have a call. Let's find out what's going on with this call. Hello, caller. What's your name? Where are you calling from?
What up, Mike? It's George in Florida again, man. How are you guys doing today?
I'm doing good, my friend. What's on your mind this afternoon?
So I'm calling in to chime in on the whole purchasing power discussion that you guys are having. I'm actually a small business owner down here in Florida. I own two small businesses. One of them is in the auto industry, and one of them is in the golf industry. So I get a little bit of a different take than a lot of people, because I do see how things are playing out across, different stages. Golf has been struggling for, 5-10 years now. We're watching golf courses close down, and it's not because people don't want to play golf. It's just because, the prices to go out and do these type of extracurricular activities have increased, and so has the cost of the goods that are necessary for them. I've also seen the sales numbers in the auto industry slow down significantly. I mean, the units that these dealerships are able to crank out, on a month-by-month basis, has slowly started to tear down. And then one of the big things that I see as myself as a shopper, one of the things I do, for my family is I buy meat in bulk. So I buy if we want steaks, I buy a New York strip. And I go home and I cut these steaks out. I usually get 20, 22 steaks or something like that out of the loin. And the loin that used to cost me $80, 6 months ago, is now a $110 loin. And instead of yielding the 20 to 22 steaks, I'm getting like 16 to 18 steaks out of it. So, it's across the board. You can kind of see this stuff. It's not that people aren't making money. It's that the money that they're making does not go nearly as far as it used to. So that dispensable income, is they're able to get those raises and stuff. It's just that there's less dispensable income. So I'm going to hang up and let you guys respond. As always, man, love the show. You guys have a great week.
Thank you. You as well, my friend.
Yeah, see, that's a great comment right there, Mike. And that's like what I'm kind of wanting to do, because what we're talking about is anecdotal. What we're talking about is what we see. But if what we realize is that this isn't just us saying this, right? This is a person in Florida who's experiencing similar situations with what we're talking about week in and week out, right? So that's a great point. And it brings me up, and that leads me into the next thing I wanted to talk about, because he's talking about the disposable income aspect. So if you're ready, I'll go ahead and start on that, Mike.
Yeah, go ahead. Feel free.
Peloton. Do you know what Peloton is?
Peloton, not off the top of my head, no.
Peloton is an exercise bike. Here's what it is. It's an exercise bike, and it's got a tablet sitting in the front of it that does workout videos. Okay. So there's a few things about this thing, right? So this mall has a Peloton store in it. So we go into this mall's Peloton store, and I started asking about it because there was a big controversy, right, about like some commercial that aired a couple weeks ago about how like the guy got his wife a Peloton for Christmas, and she was like 116 pounds, skinny as a nail, and they were like, "Oh, you're trying to say that women are fat," when she like wasn't fat, but that wasn't the whole issue, right?
Yeah.
But we go into this Peloton store, right, and it's like a tablet with workout videos attached to an exercise bike. So several things can be gleaned through this, right? First of all, how much does this exercise bike with a glorified tablet cost? It costs $2,400, Mike, for an exercise bike. Now, here's where it gets interesting, right? The employee in the Peloton store told me, I mean, the bikes are okay, right? But you really don't buy it for the bike. You buy it for the workout. And I'm thinking, oh, wait a second. Why am I going to spend all this money on a crappy quality bike? You know, and it's not that it's crappy, but it's just mid-range, right? Yeah. It's nothing special, nothing super nice. But it's the workouts that they sell you on. So they make it so it's like these personal workouts, and you can get workouts on demand, or you can do classes on demand. And I'm like, oh, that sounds awesome. And I'm like, and do you have to pay for that? And they're like, oh, yeah, it's an extra subscription. I'm like, oh, okay. Well, for $2,400, you probably get like a free year, like XM satellite radio or something like that. And they're like, no, you got to pay for that extra $40 a month. And I'm like, oh, okay. Well, what if I don't pay? Are there like some pre-programmed workouts that I can ride this exercise bike to? Nope. You basically have to get the subscription. So you got to buy this $2,400 bike, and you got to pay $40 a month, which goes into that disposable income aspect every single month just to access these videos. So I'm like, okay. I was like, you know what? I've spent some time on a treadmill. People don't realize this, but Half Dollar used to be a half decent runner, right? So I spent some time on a treadmill, and I like running to music. And I get all sweaty, and I spit and stuff like that, and breathing hard. It's just like, it would just be, that tablet would be nasty after one session if I got on one of those bikes, right? But I like to, like, oftentimes I like to run to the entirety of Nirvana Nevermind. That's a good running album to listen to when you're running. So I'm like, you know, this is great. So you can fire up YouTube, and, you know, if you don't really want to sit in front of this webcam and sit in front of a class, can you fire up YouTube and you know, do your workout to some, you know, energetic music? Oh, no, it doesn't do that. I'm like, doesn't do that? Well, can you fire up like Netflix and watch a movie or watch the news? Because some people like to watch the news when they're working out, kill two birds with one stone. No, you can't do that. Well, what can you do? Well, all you can do are the workouts. And I'm like, so you can't do anything on this tablet at all. Mike, a few years back when the tablets became popular, they had this tablet called Nabby, right? And it was like a kid's tablet, but it was a full Android tablet. But this exercise bike for $2,400, you have to pay a subscription service on top of that. And, you know, it just goes on and on and on. Where am I going with that? And what is my point with that? This is my point with that. This company only exists because of 10 years of loose monetary policy, 0% interest rates, NERP. This company just IPO'd in September, right? They just went public. They just went on the NASDAQ, actually. I think it was NASDAQ when I was looking this morning, just in September. This company is not going to be around in another 5 years because, I mean, I can buy a better quality exercise bike for a fraction of the price, put an actual tablet that could have functionality in front of it. And I'm sure there's probably even already these workout subscription services anyway. I mean, I'm not sure, but there probably are. My point is that this is just the biggest waste of energy and resources I've seen in a long time. And to me, it's signaling a peak of the top of the cycle there. So that's observation number 2. Thoughts on that, Mike?
I can understand that completely. So they're probably one of maybe over the last decade, because of the monetary policy, there's been probably a much larger amount of companies that have came into existence. And I've noticed a lot of even like retail chain buildings pop up in areas where I'm thinking like, what are they selling? Like, it's like a hot dog stand, but in a building. I'm thinking like, who's going to you won't get much foot traffic. So there's been a lot of malinvestment due to extremely cheap funds floating around with the alphas, no real value whatsoever. And then on top of that, more than likely that idea, there's a competitor out there that can probably offer it a cheaper price. So there's going to be a lot of things going belly up on top of the fact, and we haven't even touched on this much, about how corporate debt and the amount of junk, the junk bonds out there that are not even worthy of being investable are going to be problematic as well. So we're going to have a lot of issues. So one thing I noticed, unfortunately, which will iron this out, but there's a lag. And so from your screen to my screen, you're behind it. So somebody made a comment saying it looks like watching an old Bruce Lee movie. And so we'll definitely get it ironed out. But let's get to a couple more people over here. We got a lot of highlighted things over here. So someone mentioned, we gotta go back a little bit. It says Pabar says, "What about Peter Schiff ever going to get interviewed?" And so I think you've reached out to Peter Schiff, have you?
Yeah, nobody wants to talk to me because they think I'm a radical and some extreme person, and I'm really not. But I've reached out to him. I'm still waiting for him, trying to coordinate it with him. We got a couple people that we just keep going back and forth with. It's been hard over the holidays, but we'll see how we can kick that up again.
Yeah, so hopefully Peter Schiff will come on, but we'll see. Skeptical Mind says, when will the mutual funds freeze redemptions? I believe this will be the big wake-up call for the world. I think personally, this upcoming 2020 timeframe, based upon the repo market activity and whatever else will be coming out of that toolkit, will play a major role in consumer confidence as well as investor sentiment, to where a lot of people will probably slowly but surely, there's more and more of these funds that are becoming problematic because they're becoming riskier in chase of yield. Therefore, all it takes is news of one company on this side of the country having issues, and then people starting to panic, which will then lead to people questioning on this side of the country as to whether or not they're interconnected, and there's going to be more people deciding to question the people who hold their funds for them, and then there could be some type of mass panic. So I think the mutual fund race to get their funds out is already underway in certain parts of the world, because I talk about it a lot as far as me coming across all types of property funds, mutual funds, and all types of funds they put together to sucker people into parking their funds and them things. So what else? So my thoughts there. Any thoughts there, Paul?
No, well, I was looking at another one too. It said major trucking company just declared bankruptcy and 3,000 truckers have been laid off. That's from James the Ponderer. Me and you, I don't know if we talked about this last week, but me and you privately talked about it. I can't remember if we publicly talked about it or not. But remember that trucking company that just abruptly closed out of Indiana? I can't remember the name of the company.
Celadon.
Yes, Celadon. That's right. And it's more than that, right? Because there were literally truckers that were left broken down, right, on the side of the road, and their cards had been cut off, right? Truckers couldn't even gas up their rigs to get home. I mean, they just literally just left these people just stranded with no help whatsoever. Yeah. So yeah, that's an interesting development that was there, and that was one of the largest shipping trucking companies like that in the country.
Mm-hmm. Now, watch this. So this is off a little sidetrack, but someone says, it's true. In my poorer days, my wife took a TV out of the dumpster and exchanged it at Walmart. It still was under warranty. So that's back in the chat a little bit. So try to get caught up with thoughts and questions. Mm-hmm. Says, just in case, take your money out of the banks before the end of the year. Just my opinion. Yeah, I think so. Just from all the people I've interviewed, a lot of smart individuals, they have always referenced about only really having in the bank what you're willing to lose or what you won't need immediate access to if it comes down to some type of banking event. So it varies according to whatever you're sitting on, whatever your net worth and whatever you have in capital as far as what you put in there. But once again, we're reaching a point. 2020 moving forward is going to be the time frame where you're going to want to have immediate access to what you think is yours, or you're going to find out that perhaps you don't really own it. And that's in everything in your life in particular. So if you something you need right away, something of extreme value to you, you might want to have it to where you can get access to it or have it in your hands if things hit the fan and you got to either make some adjustments in your strategies or whatever. It's going to be difficult to have to call somebody, get put on hold, get transferred to their voicemail, and then share your concerns and ask them to call you back because you want to make some withdrawals or some, whatever. So, yeah.
Yeah. Good points. Well said. I would agree with everything that you said there. And it's not so much as how much you're willing to lose. I guess it is how much you're willing to lose. But for me, it's more of what do you need just to go about your daily business? And that's what that's what I do keep in the bank, right? Because I don't trust the banks. I think the system is inherently going to fail and it's going to be brought down. Can I bring up topic number 3?
Yes, go ahead. Just touch on it.
Well, it's not a topic. It's just 5 different points. Okay. Just the state of the American consumer and peak decadence, right? They got this Lego store in the mall, Mike. And explain this. Adult men are in there buying the Legos, right? So Legos aren't for kids anymore. They're for adult men. And then they got these other stores where they sell clothes and they're teenagers that are buying the $50 t-shirts, right? So it's like a totally backwards society that we live in right now. And there's this one place in particular that I just cringe every time I go in there. It's called like Vineyard Vines. I don't know if you've ever heard this brand or not.
Ooh,
For the longest time, I thought these T-shirts were from Walmart, Mike. Like if you could imagine like drawing a whale in the form of a stick pencil, right? Like a stick figure. That's like the logo, right? It's like this whale. And it's like these T-shirts. They're T-shirts. They're literally T-shirts, Mike. And it's like a pocket T-shirt. So it's got a little pocket on it. And it's like a Hanes T-shirt you would get in the mall. And it's got like a stick figure whale. And it's made to look distressed, right? Like it's been washed 100 times. These shirts are $50. They're $48 plus tax for a T-shirt, right? So it's just, we're at peak decadence, right? You only see this stuff at the peak of these cycles, at the peak of the business cycle, at the peak of the credit cycle. Because, I mean, you know, I'm glad my daughter didn't get one, right? Because I don't know how I would have handled buying a $50 T-shirt. You know, it's like that was a little bit something right there. So that's point number 3 is peak decadence. So number 1 was, you know, people just can't really spend the money on like the shoes and stuff because they're just you know, if you get a whole outfit, you got a $50 shirt, you got $200 shoes, you got $100 jeans. I mean, dressing up just to go to school today costs like $500 each day. It's like, give me a break. What is going on here? So peak decadence mixed with, you know, people can't buy everything. So they got to buy something, wear it, and then return it to the store. And then the second one was, the Peloton one, just the malinvestment that we had talked about. Let me go on to the fourth one. The fourth one is brand dilution and also kind of like focusing on the wrong thing. You remember a while back when I told you someone was telling me how like, I don't know, where was it when someone was telling me how, you know, they worked for Blockbuster and they knew that Blockbuster was going to fail when they started making more money on the late fees than on renting videos. Well, at this mall, Mercedes-Benz, right? Mercedes-Benz, the car company, has this little exhibition there, right? So this is just what I want to talk about, sort of like focusing on the wrong thing and diluting the brand.
Yeah.
So, you know, Mercedes-Benz, first of all, it's only really luxurious here in the United States, right? You go to like the third world and they're like dump trucks and stuff that you see driving around and they're all like worn down Mercedes. Like here you really uphold that image, but in other countries it's just like, well, it's just a Mercedes, right? But they got this like exposition in this mall. One of the things they have is like all this little stuff you can buy now that's Mercedes Mercedes-Benz branded, right?
Yeah.
So think about this, right? I'm not going to buy a Mercedes-Benz just because I mean, I don't really like them and I don't really want one. But my son spent $150 on a keychain, a hat, a bottle of cologne, and a bottle of body wash that said Mercedes-Benz on it, right? And my point is, you know, if they're trying to like nickel and dime like kids instead of focusing on cars, they're not really focused on the right thing there. That's point number 1. And then point number 2, if you're putting your brand on like a really fancy water bottle and you turn it over and it says made in China, you're not really helping your brand at all there, Mike. So that's just one of those points that I want to talk about. Just companies are focusing on the wrong thing at the wrong time. They're diluting their brand. And a lot of this just has to come with the fact that we live under cheap money, right? I mean, how else could you explain that?
Yeah, good points. Man, so
so that was point number 4. So go ahead with chiming in there.
No, so I was going to say, so just to, I'm so grateful that, you know, for like my wife does all the true shopping for the boys, but I'm thinking like there's no way in the world. Yeah, I you know, there's a cap. There's an expenditure cap on what you're going to be able to purchase because I'm not going to pay full price for anything where I know how to get that same item a little bit cheaper. And because my boys are more sports minded, everything happens to be basketball related or something like that. So apart from shoes, keychain, all that stuff like that, man, you better get out of here. I would look at my sons like they crazy.
Yeah, and that Vineyard Vines thing, right? Like when you go into it, the theme is like boating, right? The theme is like you're on a sailboat and you're living like basically your life is one big huge vacation on a sailboat. That's the theme of this Vineyard Vine stores. So think about the brilliance in the marketing in this, right? So you got a bunch of rich dudes that just live on a boat. They say, hey, let's make some T-shirts with boating themes and sell them for $50 a pop for people who've never been on a boat in their entire life. You know what I mean? So it's like completely backwards that we live in. It's brilliant, but when you look at it, it says established in 1998. Well, they're probably going to be going bankrupt in 2028 if they even last another 9 years from here.
Yeah. Now watch this. Sorry to cut you off. And so I noticed in the chat, and I actually pulled it up while you were speaking. And so highlight. I'm gonna just pull up here. So this looks like something that just went down, or it happened. This is late news for us, but this is late news for us. But anyway, it says New Zealand Stock Exchange halts most trading until Tuesday. And so I just came across it. Somebody in the chat mentioned this, so I thought we definitely had to touch on this because this is signs of the times where we're hearing about things that are very questionable. So imagine the amount of panic and just concern is causing the investors in New Zealand Stock Exchange. So it says derivatives trading may resume later Monday. So it looks like they're having some issues in New Zealand. So I'll dive more into it myself throughout the day. But were you aware of this, Mr. Half Dollar, or no?
I was not aware of it. Although I do know that, this happens, like, not shut down completely, but they will halt trading frequently. Like, if the market's taking a nosedive, all of a sudden something breaks on the servers and they have to immediately, like, cancel out all transactions. That happens from time to time too. About New Zealand, there's just a couple things I would like to throw out as food for thought. If I'm correct, I think something like they had just, like, elected like a 34-year-old like socialist girl, like, not girl, obviously she's a woman, but like a 34-year-old socialist as a prime minister or something like that. Like, that just literally happened. Right. Plus their allegiance is to the Queen, right? You know who's on the back of the Kiwi? That's the Queen of England is on there. So really, that's just a couple of food for thought. So the country there, they're turning hard with that socialist pivot there, if they're even autonomous in the first place. But closing down the markets, that doesn't surprise me. They will hit that circuit breaker at a moment's notice if the markets start going down.
Now, so it says all trading was impacted by unspecified connectivity fault.
See, there you go.
So whatever that means. So that's a good way of saying this is what we're going to tell you so that it doesn't look deliberate. Like, so this is an accident. We had some type of the internet went down. And so we had to suspend everything. Where in actuality, there's probably a massive amount of sell-off or something that was causing some panic, and people were starting to get wind of what's going on, and so all of a sudden the internet went out.
What do? You pull the plug. That's the internet going out. You pull the plug. That's what you do. That's what went down,
Oh, my goodness. This is...
If they got that on video, it could be like, I accidentally tripped over the plug and it came unplugged. It's like, but that's what's going on,
Yeah, so this right here, and it's something worth keeping an eye on. So I'm assuming we'll hear more about this today and tomorrow, and there's going to be some ripple effects to this. So we'll definitely stay on top of this. So...
Go ahead. Just another observation, one more observation, and then I'll get off my observations entirely.
All right.
Empty stores. Mike, this is a very fancy, posh mall. This is like this mall, it's actually like two malls, and there's like this really fancy skywalk that goes across this like big, huge urban street. But I saw empty stores in this mall at least twice. I wasn't counting them, but it struck me as the fact that this is peak holiday season, right? Why aren't there even temporary stores in this mall? Because it's a destination mall, and I'm still seeing closed stores in these malls. And it's not like closed for remodeling, and it's not like coming soon. It's like these stores look like they've been closed for quite some time. So that just struck me as interesting there too. Just that, if we're at the peak, well, some of these places are going to be going out of business and closing before others, right?
Very true. Very true. So the mall, I think the mall you're referring to, it's always been labeled as a very affluent mall. And so it's one of the things where people of greater means tend to shop there primarily. So unless you know exactly what you're going there for in particular, most people, in the city itself don't really bother to go there just because of the pricing of things and things of that nature. So when you got the people with supposedly more money not shopping there as much, then that lets me know that there's a problem, because I already know for a fact the average middle class person wasn't going there frequently in the first place. So signs of the time. So I'd imagine the things we're talking about here, everyone who's watching you're witnessing things of that nature in your own neighborhoods, and so in your own malls, as well as your own assessment of the current slowdown / recession that is already underway. And so all the statistics, all the measurements show that we're in a recession. It's just you won't hear about it on the mainstream news just yet. But think about this. Everything we always hear about, especially this article here about New Zealand, when it arrives to your doorstep, it's already old news, which means it's already taken place. That means all the people who are directly impacted, such as the people invested in the New Zealand Stock Exchange, they're already probably having some concerns themselves. And this is why we were probably asleep. So once again, the recession, in my opinion, is already here. Don't be surprised when it finally hits your front door that, you'd be like, oh, we know now you start believing them. No, we've been telling you that for some time now. So it is what it is. But let's get ready to dial back, Mr. Half Dollar. Any last thoughts? Any last comments you want to leave us with?
Yep, that sounds good. This week there's a lot of action going on this week. We've got several Fed heads giving speeches this week. Some of them are more influential than others, but they could cause market movement there. Since the last time we spoke, it's interesting because there's been a trade deal with China.
Mm-hmm.
But you know, so and then President Trump, but we're immediately starting phase 2, right?
Mm-hmm.
So it's like we got a phase 1 trade deal, but they haven't signed anything. The terms are like loose and vaguely worded, and you know, they haven't put on the brand new tariffs. And China said they're promising to buy some more agriculture and all this and that, but it's not formal yet, right?
Mm-hmm.
Just like USMCA, the Canada, U.S. and Mexico trade deal.
Yeah.
That's not been formalized either, right? There's been no vote for impeachment. So it's like all of this stuff is just what I was calling a dog and pony show out of last week.
Mm-hmm.
It's continuing this week, but it still could have some market movement. In addition to that, there's a lot of housing data coming out this week. I think pretty much every day this week. So we can get an assessment of what the housing market's looking like. There's also GDP coming out again. It's either like the second or the third estimate for the third quarter. So there's a lot of stuff going on this week. So even though we're in, and then the options expiration on Friday, right? So we could see some movement here this week, I guess is my point. So I'm looking at platinum, and I'm looking at copper, and I'm looking at crude oil. I don't know if you noticed, crude oil is back above $60 a barrel right now, and everybody was talking about, you know, get ready for 40s and get ready for 20s, and I think it's going up. I think it's going higher, and I think that the move might have started there. So it's a good week, and I'll let you go ahead and dial it back and sign us off here, Mike.
All right. So with that being the case, we will definitely be back here on Wednesday. Got an interview coming up this week. I know it's going to be a good one, so stay tuned for that one. Other than that, keep us posted on the news. As always, if any news stories come across, send an email, newsletters@silverdoctors.com, or just leave it at the bottom of this comment section of this video, so we'll check back and look at it. And then, as always, if you guys enjoyed the back and forth this afternoon, don't be afraid to donate a thumbs up beneath this video here, and then share this video so more people can find out about what's going on and how we come together to help lift one another up during these questionable times. And so, as always, social media links down below. Connect with us on Twitter. Love to continue the conversation there as well. So, that being the case, be blessed, be safe. See you guys Wednesday. Peace.